If you ever sold a car, got wedding cash, moved savings around, or helped your family with a transfer, listen. There is a $10,000 line in the banking system, and once you cross it, a report can move without asking your permission. That is the first thing people miss. The second thing they miss is way worse. The real trap is not the report. It is the panic move people make the second they hear about it. And that panic? That is where honest people accidentally start looking guilty. Officially, not financial advice. Unofficially, I read the fine print so you do not have to. My professor would hate that sentence, which is usually how I know it is useful. Here is the part nobody explains in normal language. A bank report is not a criminal charge. It is paperwork. Boring, annoying, invisible paperwork. But paperwork is how the machine decides whether your story makes sense. And if your story does not make sense fast, the machine starts leaning in. So no, the $10,000 rule is not the IRS jumping out of a ceiling vent because you deposited cash from selling your old Honda. That is internet panic bait. The actual danger is simpler, colder, and more common. It is when people try to outsmart the system and accidentally create the pattern the system is built to notice. Actually, no. Let me rephrase that. The money is rarely the problem. The pattern is. If a deposit is large, fine. If a withdrawal is large, fine. If it is tied to a real event, fine. But if you start splitting one clean transaction into tiny pieces because you think that makes you invisible, you are not being clever. And banks do not need to hate you personally to flag you. They do not need a story. They do not need to be in a bad mood. They just need to see behavior that looks off compared to how normal people move money. That is why so many people get this backwards. They think the rule is about punishment. It is not. It is about visibility. And visibility is not the same thing as guilt. Look, here is the clean version. A report can happen when a cash transaction crosses the threshold or when the pattern looks suspicious. The big one everybody hears about is the automatic reporting side. But there is another layer sitting under it, and that layer is the one that scares people the most because it does not care about your feelings. That layer is the Suspicious Activity Report, SAR. And unlike the neat little threshold people obsess over, this one does not come with a cute warning label. It does not say, "Hey bro, you are at risk, maybe stop." It does not ask for your opinion. If the bank thinks the behavior deserves a closer look, it can file the report, quietly, internally, without giving you a little heads up so you can adjust your story like a movie villain. That is the part most people never hear, and that is exactly why they get sloppy. So let me put faces on it. Meet Marcus. He is 26. He sells his car for $9,500 in cash because the buyer wanted a quick deal. Marcus does the smart thing. He gets a bill of sale. He keeps the title transfer. He deposits the cash with a clean explanation that matches the paperwork. Simple. Boring. Verifiable. The bank may still ask questions, but Marcus can answer them in one sentence without sweating through his hoodie. Now meet Denise. She is 69. Her son and daughter keep sending her money from 3 different apps because they think that looks safer than one big transfer. It feels safer. It is not safer. It is exactly the kind of chopped-up pattern that makes a bank wonder why a normal family story suddenly looks like a puzzle nobody wanted to finish. One clear transfer with a note beats 5 weird ones every time. And here is Eric. He gets an inheritance. He thinks the money is clean, which it is. But he walks into the branch with no estate paperwork, no executor letter, no clean source of funds trail, and no patience. Then he gets frustrated when the banker asks basic questions. That is how a normal inheritance turns into a long afternoon of suspicion. Not because he did something wrong, because he showed up unprepared. That is the real street translation of the bank rule. The system does not need you to be evil. It only needs you to be unorganized. And if you want to see how fast organization matters, listen to Jasmine. She runs a tiny side hustle. Cash sales. Small jobs. Not some empire. Just real money from real customers. She keeps receipts. She logs each sale. She stops trying to make the bank guess what happened. That is the move. Not hiding. Explaining. In a way, a stranger can verify in 30 seconds. That is the difference between a normal life and a headache. And yes, people online love turning this into a conspiracy game. They say random stuff like, "Oh, if you transfer $600, the government taxes it." No. That rumor survives because people confuse reporting with taxation. A report is not a bill. A flag is not a conviction. And a bank asking a question is not the same thing as the IRS already deciding you did something wrong. Actually, let me sharpen that. A report is a flashlight. It is not handcuffs. The flashlight can still be annoying. It can still land on you. But it is not the same thing as being charged, fined, or accused. That distinction matters because fear makes people do stupid stuff. They avoid deposits. They split cash. They lie to a teller. They over-explain. They start acting like they are in a courtroom when they are really just standing at a counter with a stack of bills and bad internet advice in their head. And that overreaction is its own trap. Because once people start panicking, they start creating the exact signals they wanted to avoid. They send the money in pieces. They use random apps. They say things that do not line up. They change the explanation halfway through. That is when the machine gets interested. So what do you do instead? You stay boring. When a banker asks where the money came from, keep the answer short. Car sale, gift from family, insurance payout, estate distribution, business revenue, rent refund. Short, clean, consistent. No freestyle poetry. No improv comedy. No giant speech about your life choices, your cousin's crypto phase, and how the app was acting weird that morning. The more you talk, the more chances you create to contradict yourself. And the more you contradict yourself, the more the system wants to know why. This is the part people hate because it sounds too simple. But simple is not the same thing as easy. Simple means the rule is clear. Easy means humans always follow it. And humans, as a species, are elite at doing the exact opposite of what would have protected them. So if you want the safe version, build the paper trail before the money moves. Tonight, make one folder. Seriously, one folder. Not 50 screenshots scattered across your phone like you are preparing for a courtroom in the cloud. One folder. Put in the bill of sale. Put in the title. Put in the receipt. Put in the bank statement. If it is a gift, add a note from the giver if you can. If it is inheritance, add the estate paperwork and executor letter. If it is business money, add invoices and a simple record of the sale. If it came from insurance, keep the claim information. If it came from a refund, keep the email and confirmation number. You are not doing this because you are guilty. You are doing it because memory is terrible and institutions love documents more than stories. And yes, that sounds unfair because it is. But unfair does not mean unmanageable. It just means you need to play with the rules that already exist, not the fantasy rules people invent in comment sections. Let me hit the most important trap again, because this is where a lot of people get burned. Do not split a legitimate deposit into smaller chunks just because you think the bank will not notice. That is called structuring. And structuring is not some harmless loophole. It is the kind of thing that can turn a normal transaction into a suspicious one. The irony is brutal. The move people make to avoid attention is often the move that creates attention. They think, if I stay under the line, I am safe. No, that is not how this works. If the pattern looks intentional, the line does not save you. It just becomes part of the evidence that you knew what you were doing. That is why I keep saying the pattern is the trap. The number matters, sure, but the behavior around the number matters more. And this is not some theory floating in the clouds. Banks are built to scan for weirdness at scale. They process huge volumes of deposits, withdrawals, transfers, and cash activity every year. So you are never the first unusual case they have seen. They are not sitting there judging your personal morality. They are matching your behavior against patterns that already broke in the past. That means your job is not to perform innocence. Your job is to make the source obvious. Here is a clean example. If you sold a car, say exactly that. If a family member gifted you money, say exactly that. If you sold furniture, say exactly that. If a business paid you, say exactly that. Do not say, I do not want to pay tax. That sentence is poison. Not because taxes are magic, because it changes the conversation from source to motive. And motive is where people get tangled. Once you start talking about avoiding tax, the question stops being, what is this money? And becomes, why are you trying to hide it? That is not a lane you want to enter unless you are actually prepared to explain it. Keep it boring. Keep it documented. Keep it consistent. And whatever you do not freestyle extra details because you think honesty means oversharing. Honesty does not mean giving a stranger your whole life story in a lobby. Honesty means the answer matches the paper. That is it. Now, let me destroy one more myth because it keeps coming back like bad Wi-Fi. People think a bank report automatically means trouble. It does not. A report means the system noticed something. That can be routine, that can be explainable, That can be resolved fast. Sometimes it is literally just part of the process. The danger is not the report itself. The danger is not being able to back up the money when somebody asks the simplest question in the world. Where did it come from? If your answer is clean, you are fine. If your answer is, the room gets colder. So when should you worry? Not when you cross the line by accident. Worry when your records are weak. Worry when the money has no story. Worry when your explanation changes. Worry when you start breaking one transfer into pieces for no reason other than trying to look smaller. That is the stuff that makes a legit transaction look weird. And if you are thinking, okay, but what if I already did something messy? Then stop spiraling. Do not invent a cover story. Do not start deleting messages. Do not start making the paper trail worse. The best move is still the boring move. Gather what actually happened. Reconstruct the path. Keep it factual. If you truly have a complicated situation, that is where a real professional exists. But do not walk into more confusion trying to fix confusion with lies. That is how people trip themselves. So here is your practical playbook. And I want this part to feel almost insultingly simple. First, keep a separate folder for any large transfer, sale, gift, or inheritance. Second, save the proof the moment the event happens, not 3 months later when you are digging through screenshots like an archaeologist with a deadline. Third, label the money correctly in your own notes. Fourth, keep the explanation short when the bank asks. Fifth, never split a transaction just to pretend it is invisible. Sixth, if the source is business-related, track it like business money, not like random pocket cash. Seventh, if you do not know how to explain it cleanly, do not move it until you can. That is the whole game. Not panic, not tricks, not casino brain. Documentation. Because this is the part nobody wants to say out loud. The system does not need you to be dishonest. It only needs you to be sloppy. And sloppy is what turns a legal move into a suspicious-looking mess. The house always wins when you panic. It loses interest when you are organized. So if you are hearing me right now, here is the move. Tonight, open one folder and clean up your money records. Put in your car sale paperwork. Put in your gift notes. Put in your inheritance records. Put in your business receipts. Put in anything that proves where the money came from. Then keep your answers short the next time somebody asks. That is how you stay on the right side of a system that was not built to read your mind. And if you only remember one line from this whole video, make it this. Do not make honest money look suspicious by acting weird around it. Don't let them play you. Listen to what they're actually saying. Send this to somebody in your family who still thinks cash solves everything. And drop this in the comments. What is the weirdest money myth you have heard lately?